Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is currently rejecting a quite strong historical monthly demand and support zone. In fact, what we can notice is that in multiple occasions throughout the years, the market has tested this zone, and every time it has rejected the level to the upside very aggressively. Now, what we can see is that in all this period, just one time the market managed to break below, and immediately that break to the downside anyway ended up being a fake breakout, because the market just broke back above and continued, as we can see here, respecting this area as demand and support. Now, what we can see is that we just had yet another test of this historical demand and support area, fueled also by very strong institutional buying. Immediately after that, the market rejected to the upside very, very aggressively. And we will be speaking about all the institutional buying that happened in this zone when we will move to the commitment of traders analysis in just a few moments to see what institutions are doing in the market. But for now, let's keep in mind that the market is rejecting this very strong historical monthly demand and support zone. And the market from a monthly standpoint is currently still in a very strong uptrend. And we can notice that the market is still in an uptrend if we look at the price action that the market has been printing here, creating first the impulse to the upside that we have just spoken about, then the start of this correction, and immediately new buyers have stepped in, pushing the price higher. And there is the possibility to see yet another monthly higher high. So continuing this monthly uptrend and rejection away from that previous level of demand and support we have just spoken about. The nearest level of very strong supply and resistance is currently at this area. This is the zone from which all the previous push to the downside was created, which means that there is a good probability that the market might want to go and test what kind of liquidity there is inside of this zone. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear. What we can notice is that we have a perfect example of a shift of structure and trend. We can notice how the market went here from the creation of weekly lower lows and lower highs to then the creation of weekly higher highs and higher lows. The inversion pattern in this case was this double bottom. Now, when you see the market being in a downtrend, so creating lower lows and lower highs, then the market fails 2 times in a row to create new lower lows. So first here and then here. At that point, what you expect is a shift of structure and trend. So the market to shift from these lower lows and lower highs to creating higher highs and higher lows, which is exactly what the market did here, inverting the trend to the upside. Now, right now, we can notice that the market is still in an uptrend. The market is still creating, in this case, weekly higher highs and higher lows. So there is a possibility for the continuation to the upside and for the market to go and test what kind of liquidity there is inside of this zone, which is the area that we have just identified when we were on the monthly time frame. We can also notice how we do have some structure being tested and rejected to the upside at this level. This level was the previous weekly resistance from which both these rejections to the downside were created. The market then broke above that zone. So this previous resistance became support here, here, and here. And the market is still respecting this area as support, meaning that there is the possibility to see a potential rejection to the upside away from this area, fueled by strong institutional buying into that supply and resistance zone that we have previously identified. Let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is very clear, and we will now speak about all the structure that is currently being printed. But before we dig into the structure here, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. The first thing that we have to keep in mind is that if we are looking at the data for the euro, we are actually already looking at euro USD because all currencies on the spot are traded against the USD. And what we can notice here is that with the last reports, net positions have once again started to be increased. We had the low here at 115K. We're now back at 119K. Longs are way more than shorts from an institutional perspective. We can notice 255,000 longs compared to only 136,000 shorts from an institutional perspective on Euro USD. Now, if we go back in the past, we can see that actually in the past we had the complete opposite. We had here negative net positionings with it. This means if we have a negative net positioning, that we have more shorts than longs from an institutional perspective. And in fact, that is exactly what we had. We had 208,000 shorts compared to only 182,000 longs. So we went from a situation in which we had a negative net positioning, more shorts than longs, to now having a very positive net positioning, so more longs than shorts, the complete opposite. So clearly institutions have been moving back to the bullish side for the euro, and since all currencies are traded against the USD on the spot, they have been moving to the bullish side for euro USD. So let's keep in mind all the institutional longing currently going on euro USD, and let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So from a daily perspective, we have a situation where the market is currently in a range. We have the top of the range here currently acting as resistance. And at the same time, we have the bottom of the range currently here acting as support. Now, until the market will remain in between these two levels, more horizontal price action could be expected. However, if the market will manage to break above the range, that is where things, in my opinion, get interesting, because a break above the range would make all the previous high of the range, so all this level of previous resistance, become support. And in a situation in which already we're seeing institutional buying, if we see the break and retest, that is a perfect situation in which more institutional buying could take place. At that point, further increasing the probabilities of a potential rejection to the upside away from this area. So if we will see this break and retest, what would I expect? Now, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.